Welcome to Price Action Traders Bitcoin. This channel focuses exclusively on daily Bitcoin structural analysis for Bitcoin traders and investors. Each day we answer 5 critical questions. Where are Bitcoin's key price zones? Are lower and higher timeframes aligned? What is volatility telling us? How are DXY and gold influencing Bitcoin? And what must change to revise Bitcoin's structure? Structure defines context. Context defines edge. Today is Monday, 23rd February, the start of a new Bitcoin trading week. Before we assess what is happening right now, we need to review last week's price action and establish whether structure has materially shifted or whether Bitcoin remains in compression. Last week closed inside the compression range, but today, Monday, Bitcoin has opened with a bearish engulfing candle, breaking below the compression lows of the 12th, 19th, and 20th of February. The key question is whether today's close confirms the beginning of downside expansion or whether buyers push price back into the range and the breakdown loses structural weight. Let's begin by placing last week's close and today's open in the context of the higher timeframe structure. And does today's move change anything at the higher timeframe level? On the yearly timeframe, Bitcoin opened 2026 at $87,626 and reached its annual high of $97,900 in the first 2 weeks of January. Since that high, price has been in a structured decline. The yearly candle is printing a lower high, lower low structure. The most recent weekly close of $67,629 sits deep in the lower half of the yearly swing. There has been no violation of the dominant yearly framework. Last week's compression and today's early move are still operating inside a much larger structural map. The yearly structure has not changed. It was already bearish, and it remains so. On the monthly time frame, February opened at $78,744, printed a high of $79,344, and a low of $60,000 set on 6th February. The current monthly close sits at $66,423, which is $3,249 below the monthly midpoint of $69,672. 3 consecutive months, December, January, February, have all closed in the lower half of their monthly ranges. The monthly structure is bearish and consistently so. Critically, the monthly candle has not been materially altered by last week's compression or today's open. We are still inside the February range. The monthly context has not changed. Last week and today must be evaluated within monthly containment unless proven otherwise. On the weekly time frame, last week, the week commencing 16th February, closed at $67,629. That close sat $228 below the weekly midpoint of $67,857, the first bearish weekly midpoint close in 3 weeks. The weekly candle printed a lower high at $70,092 versus the prior week's $71,384, and a lower close at $67,629 versus $68,888. The weekly low of $65,621 was a higher low than the prior week's $65,127, so the floor held on a closing basis. Last week's verdict? Bears took the weekly midpoint, bulls held the floor. The structure compressed lower but did not break. Now today, Monday, 23rd February, opens with a bearish engulfing candle pressing below those compression lows. The weekly structure that held last week is being directly tested at the open of the new week. At the highest level, the broader structural framework remains intact, bearish at the yearly and monthly level, compressing at the weekly. Last week closed with bears in control of the weekly midpoint, but bulls holding the compression floor. Today's bearish engulfing open is the first direct structural test of the new week. We are not reacting to a confirmed structural shift. We are watching whether one begins today. Structure tells us direction. Now we need to measure energy. To assess whether today's bearish engulfing open has genuine conviction behind it, we examine volatility across 3 layers: monthly, weekly, and daily ranges. On the monthly time frame, the last 13 months of Bitcoin ranges established the broader volatility regime. The regime peaked at $30,497 in November before oscillating through December at $15,238, January at $22,222, and February's current range of $19,344. The monthly regime is neither expanding nor collapsing. It is cycling within a familiar historical bandwidth. There is no monthly volatility confirmation of a new expansion phase. The broader energy environment at the monthly level is contained. On the weekly time frame, the volatility sequence is decisive. The reset week of 2nd February printed a $19,284 range, the energy event that defined the current compression. What followed was a sharp contraction. The week of 9th February compressed to $6,258, and last week compressed further to $4,471. 2 consecutive weeks of contracting ranges. Last week's bearish close below the weekly midpoint was achieved on declining energy, a smaller range than the week before. A bearish directional statement on shrinking weekly volatility is a structural warning, not a confirmation. For today's bearish engulfing to carry real weight, we need to see weekly range begin expanding from this point, sessions posting progressively wider movement as price moves lower. On the daily time frame, the compression has been relentless. Daily ranges across the last 14 sessions moved from a peak of $3,543 down to $1,210 on Saturday and $1,091 on Sunday, the tightest daily session of the entire sequence. Today's bearish engulfing candle is the first daily session in a week to attempt a meaningful range expansion. That is significant. After 14 sessions of progressive compression, any candle that expands range and presses key levels carries more weight than the compression candles that preceded it, even if the absolute range is not extreme. The coil is releasing energy today. The question is whether it is the beginning of a sustained directional move or a single impulse that gets absorbed. Monthly volatility contained, cycling within historical range. Weekly volatility contracting for 2 consecutive weeks. Last week's bearish close was delivered on declining energy. Daily volatility. Sunday posted the tightest session of the sequence at $1,091. Today's bearish engulfing candle is the first energy release after 14 sessions of compression. One candle does not define a regime, but after this level of compression, the first expansion candle demands attention. Now we assess external influence. We have measured direction and energy. Now we assess whether today's move is developing in isolation or whether broader liquidity conditions are aligned with the bearish open. On DXY, the US dollar index, the structural picture is mixed. The yearly DXY trend is down. The monthly structure is contained. February's DXY candle is an inside bar, holding without a decisive break in either direction. However, at the weekly level, DXY is moving higher. Last week printed a higher high close at 97.79. A rising dollar at the weekly level while Bitcoin presses its compression lows creates a partial macro alignment. Dollar strength is historically a headwind for Bitcoin, and this week that headwind is present at the weekly time frame. It is not dominant, but it is not absent either. Gold is sending a more complex signal. On the yearly time frame, gold remains firmly bullish in a clear higher high structure. On the monthly time frame, February's gold candle is an inside bar, undecided. At the weekly level, gold printed a lower low last week, and critically, gold made a new yearly low on 17th February at $4,854. A market that is bullish on the yearly, but printing new yearly lows on the weekly, is showing internal structural fragility. Gold is not providing the strong safe haven bid that typically accelerates capital rotation away from Bitcoin. Instead, gold's own weekly weakness suggests broader liquidity is undecided rather than decisively defensive. This reduces the macro conviction behind today's Bitcoin bearish open. DXY weekly higher, a partial headwind for Bitcoin. Gold weekly lower, printing a new yearly low on 17th February, not providing a decisive safe haven signal. The macro environment offers partial alignment with today's bearish open, but falls short of a clean directional confirmation. Bitcoin's move today appears primarily internally driven, which means we must return to Bitcoin itself. Context assessed, energy measured, influence evaluated. Now we anchor the active structural boundaries that define what today's move means. On the yearly time frame, the active swing runs from the 2026 high at $97,900 to the yearly low of $60,000, set on 6th February, a yearly range of $37,900.
Bitcoin at $67,629 sits in the lower third of that swing. The structural weight at the yearly level is firmly on the downside. Nothing about last week or today's open changes the yearly swing definition. On the monthly timeframe, the active February swing runs from the monthly high at $79,344 to the monthly low at $60,000. Monthly range, $19,344. Bitcoin sits below the monthly midpoint of $69,672 by $2,043. Bears control the monthly swing position. A sustained return above $69,672 is required to shift monthly control to the bulls, and that level is $2,043 away from the current close. On the weekly timeframe, the compression swing is defined between the weekly high at $70,092 and the compression floor at $65,127, the lowest weekly low across weeks 7 and 8. Today's bearish engulfing open is directly testing the lower boundary of this swing. Everything inside $65,127 to $70,092 is rotation within the compression. A sustained daily close below $65,127 signals the compression has resolved to the downside and the active weekly swing is transitioning. That is the structural trigger to watch today and through the early week. Active swings defined. Yearly, $60,000 to $97,900, price in the lower third. Monthly, $60,000 to $79,344, price below the midpoint, bears in control. Weekly, $65,127 to $70,092, compression boundaries being tested at today's open. Everything inside these boundaries is rotation, beyond them is transition. Now we define the exact levels that must be challenged. From the active swing structure, the decision zones are precise. The flexible resistance zone sits between $69,672 and $70,092, the monthly midpoint and the weekly compression ceiling. While price remains below $69,672, the monthly structure stays bearish. A sustained daily close above $70,092 breaks the compression ceiling and opens the path towards $71,384 and the broader weekly swing high. The FRZ is not in play today, but it defines the level at which the bull case re-engages. The flexible support zone is where today's action is focused, between $65,621 and $65,127. These are the compression lows of the 12th, 19th, and 20th February. Today's bearish engulfing open is pressing into this zone at the open. The critical question is whether today closes below $65,127. A close below that level confirms acceptance below the compression floor and exposes the structural floor at $60,000, the 6th February dominant bar low and the yearly low. A close back above the FSZ, back inside the compression range, tells you the bearish engulfing was a wick into support, not a structural break. The close is everything. The line in the sand remains $67,857, the weekly midpoint. Last week closed $228 below it. Today's open is pressing further below it. For the bull case to reclaim any footing today, price must close back above $67,857 by the end of the session. Failure to reclaim it confirms bears hold the weekly midpoint, and the pressure on the FSZ continues into Tuesday and Wednesday. FRZ, $69,672 to $70,092, not in play today, defines the bull re-engagement level. FSZ, $65,621 to $65,127, directly in play today, the compression lows being tested by the bearish engulfing open. Line in the sand, $67,857, weekly midpoint. Bears hold it, bulls need to reclaim it. Today's close answers the most important structural question of the new week. That brings us to the final stage. Today is where structure meets time. Monday, 23rd February, is the weekly reset, and it has opened with an immediate structural statement. The bearish engulfing candle breaking below the compression lows of the 12th, 19th, and 20th February is the first real expansion candle after 14 sessions of progressive compression. After a coil of that duration and intensity, the first breakout candle carries structural weight. Buyers need to respond with conviction today, not over the coming days, if this move is to be rejected as a false expansion. Two scenarios define today's session. Scenario 1, price closes today below the FSZ at $65,127. That is a confirmed structural break. The compression has resolved to the downside. Acceptance is being established below the compression floor. The primary narrative for the week becomes downside continuation towards $60,000. Bears are in control of the new week from session 1. Scenario 2, price reclaims and closes today back above $67,857, the weekly midpoint. That tells you the bearish engulfing open was a wick into the support zone, not a structural break. Buyers absorbed the selling pressure at the compression lows and pushed price back into the range. The breakdown loses structural weight. The compression range extends rather than breaks. The week resets into a contested range rather than a directional move. Between those two outcomes sits a third possibility. Today closes somewhere between $65,127 and $67,857. That is the ambiguous close, below the weekly midpoint but above the structural break level. In that scenario, neither bulls nor bears have declared a winner today. The pressure continues into Tuesday. Watch Wednesday's close as the tiebreaker. If compression lows are not reclaimed by midweek, the structural weight shifts progressively toward the bear case. One rule overrides everything today. Watch the close, not the wick. The bearish engulfing open pressed the lows. The close determines whether that press has structural meaning. Wicks into the FSZ are noise. A daily close below $65,127 is the signal. At the highest level, Bitcoin's broader structure remains intact, bearish at the yearly and monthly level, compressing at the weekly level. Last week closed with bears taking the weekly midpoint and bulls holding the compression floor. Today, Monday, 23rd February, opens with a bearish engulfing candle that directly tests that floor for the first time in the new week. Volatility has not yet confirmed extension. Monthly ranges are contained. Weekly ranges contracted for 2 consecutive weeks. Daily ranges compressed to their tightest point on Sunday at $1,091. Today is the first energy release, but one candle does not define a regime. DXY weekly higher provides a partial headwind. Gold's weekly lower low and new yearly low on 17th February reduces the macro conviction behind this move. The pressure is primarily internally driven. The FSZ between $65,621 and $65,127 is the structural decision zone. The weekly midpoint at $67,857 is the immediate recovery line. Until today closes below $65,127 on a confirmed basis, we treat this open as pressure, not transition. Until today closes back above $67,857, the weekly midpoint belongs to the bears. 4 questions answered for last week. Bears controlled the session count, 4-3. Ranges compressed, not expanding. Weekly candle printed lower high, lower close, lower high, LHLL. The floor held on a closing basis. Today's open is the direct structural follow-through. The close tonight answers the question last week left open. Structure defines context. Context defines edge. Subscribe to Price Action Traders Bitcoin and turn on notifications. The daily institutional briefing is live every day at the same time. The Bitcoin Deep Dive podcast is also live on the channel. Good trading.